Rahul's in here. I can see some other phone numbers. I don't know who you guys are. Matt, Tom, Chris, Wayne, Richard.
Yep.
Okay, guys, how's everybody doing?
Doing good.
All right.
Okay, so you guys can see right here is the messages. If you guys aren't in the chat room, not too many of you are, you can go right here and start chatting, ask your questions, whatever you want. So, what would you guys like to go over? Do you guys want to go over maybe some charts, maybe build a little bit of a watch list?
Building a watch list would be a good idea.
What are some questions, guys?
Watch list and chart.
Okay.
So everyone, maybe we start off with building a watch list, and then we'll pick a few of the tickers, and we'll do a question analysis on for tomorrow.
Okay, yeah, that's what I'm gonna do. Is I'm just gonna talk about the blue chips right now, guys. The blue chip stocks we trade. Let me get my new in here real quick. Justin, your mic is killing us right now.
It's a little bit loud, Justin.
Staticky.
All right, let me switch on my mic sound. I'll use a different one.
That one sounds better now.
I moved a little bit away from my mouth. Maybe I was yelling so much.
Okay. Yeah, that's not bad at all.
You know, there's a headphone type mic, so I don't know how loud I'm talking.
Oh, I see.
Okay.
Justin, you said somebody got hurt at work. It wasn't you, was it?
Oh no, not me. No, we had a guy set a 2-ton piece of steel down on his foot.
Oh no.
Jeez.
How did that turn out?
Broken foot.
Oh.
But we took care of it.
Okay. All right, good.
So guys, you have to call in right here, this phone button. I'm just waiting for Tom here to see the screen. Rahul, how are you doing, buddy?
Pretty good. How about you?
Good, good, good. Did you catch that Amazon trade with us?
I did. Actually, I was trading this week's April calls, and I made about 100% of the.
No way.
Oh, right on. Good job.
Yeah, that was pretty sweet.
Congratulations, buddy. Good job.
That's cool.
That's exciting to hear.
You know what would be nice is if you can post that would be so cool. Like in a trade history.
Okay, let's see here. Just want to make sure everyone
Is this mic sounding any better?
much better.
Way better.
Alright, I hooked up my audio detectors on it.
Alright guys, so I'm going to start to everybody here who hasn't been around. What we do, this is our chat room here. You guys can see we have our blue chip watch list and we have our small cap watch list. This is for our day traders right here. Live audio and screen share right here. This is the button that gets you guys exactly where you're at right now. So every day we're trading, you can see us live trading and you guys have microphone access just as you do now and we can talk. And you guys can ask any of your questions and you know exactly what trades you're getting into, and same exact second you can get in them with us. And you can see here on the blue chip watch list every morning about 30-40 minutes before the market opens we post these watch lists. So for instance, we'll say long Amazon at 607.78 and short at 605.78. So what we expect you guys to do is just draw horizontal lines at these price points. So let's go to Amazon real quick and I'll show you guys these lines.
Real quick, let's remind them that we always trade options in the blue chips.
And yeah, my dad was telling me, just so you guys know, that's these blue chips here, these very expensive stocks over $100. We just trade strictly options in these. That's it. So for instance, guys, I want to show you today Amazon. I said that we wanted long Amazon over $607.78. So let's draw that here on our chart. Put this more on like a minute chart so you guys can see what we were doing pre-market here. So guys, what I did pre-market is I just mapped out the pre-market high here, which was 607.71, exactly the buy point that I told you guys. And I said, all right, guys, Amazon today, let's long Amazon. So what I expect you guys to do is when you get watch list is just draw a horizontal line just like this. Then I say, all right, guys, well, I'm looking to short Amazon.
Show them pre-market.
That is pre-market.
No, so they know.
So this is all pre-market data, guys. So I'm mapping out the high and the low here. And then, like I said, here's the high. I expect to long it over the 607.71 because it's a breakout. And then if Amazon breaks under the pre-market low, I plan to short it. Those are just basic pivotal points, guys. It goes into a lot more depth. We'll have the multi-month. What we'll do now, and just shortly, is we'll do top-down analysis. We'll be looking from a year out to 6 months to 3 months to a 15-minute chart and then into a daily chart. And we'll have 15 lines on these charts before we even get into 1 minute. But here we go, guys. So this is basically what you'll see in the watch list in the morning. You'll have these pivotal points, and what we do now is we just read the price action as we get closer to these support and resistance lines. I mean, at this support, we can say, all right, we're looking to short it, but we also can be looking to long it. 90% of the time when we trade these blue chip options, we're buying into washouts. So we're buying like Amazon today. Very rarely are we going to buy Amazon as it breaks out of the support. We don't really buy breakouts a lot. We buy a lot of washouts when the candlestick is still red, for instance, and we're trying to go the opposite direction. That's when we play our stuff. We get better risk to reward there. We get better entries, especially with options, and many things. Do you guys understand that a little bit?
Yeah, absolutely.
Okay.
I'm new to trading some of these bigger name ones, like I think lots of SPY, Amelia, or play Amazon. When we're playing the washout, do you find that the spreads get a lot tighter so you get a better entry?
Yeah, because it's so difficult to trade options because everybody knows that they're very volatile and they move quite a bit. So we have to get a lot of the times, like today, for instance, there was a very light volume in the market, just slow, and it's been like that the whole week. So we have to focus on getting the absolute perfect entries, especially on options, and getting these very low risk plays. So yes, I'm studying, guys. I'm studying the chart, but I'm also studying, I mean, the chart could be setting up perfectly for Apple, and I could be saying I want to buy it. And I'm studying the big option chain with 5 different strike prices, and I'm watching the support and resistance levels within the level 2, and I'm trying to understand where is there some support in the level 2, where am I seeing buyers come in, where am I seeing sellers, and most of all, where am I seeing the level 2 fluctuate. So once I get my mind up and I say, all right, Apple, I like how Apple's crashing here and I'm expecting here, I'm hardly even looking at the chart. I am just studying the level 2 for each option contract and saying, all right, now where is the support and resistance here, and where can I get the best entry, and where do I see it bouncing around, and being able to read that kind of price action.
Can you circle the pre-market for them so they can read the chart better, because it would get confusing, so they know where you're starting at?
So let me give you guys an example right here. So again, right now we're going to do exactly what we did with Amazon, just the pre-market low and the pre-market high. So let's just say for basic right now, these are our pivotal points for Apple, and we plan to long Apple over 111.25, and we plan to short Apple under 110.93. Well, what happened with Apple, and I actually said this, we just didn't have the time. This candlestick right here, this is 931, 932, 935. So within the first 5 minutes of the day, and we caught this the other day, we didn't catch this with Apple today because we were looking at some small cap stocks. We were going to give the blue chips a minute. But what Apple always does, and you're going to be able to read this time and time again, you're going to be able to, every single one of these blue chip stocks has a personality, and you're going to be able to understand their personality and understand how they work. And most of all, you guys know that these blue chip companies are completely dominated and manipulated by algorithmic machines and hedge funds. So you have to get into their mind and understand, what are these algorithmic machines doing and hedge funds, and how are they, smarter money, beating the amateur and stupid money, as you can say, that are buying the basic breakout and breakdown patterns. So that's something that we really study. So for instance, Apple today, I even said it before the market opened. I have it on video, and it was, hey guys, what I like for Apple is I like Apple. I want to long it over 111, but I never, everybody in the chat room knows, I will never buy Apple here for a breakout, especially in markets like we're having right now where the VIX is very low. We don't have a lot of volatility in this market, very light volume and very slow. So what I always do is I want Apple to shoot up, and then I want Apple to crash right back down. I want to see it hit some support, which would be right here. And on a daily chart, we had some more support below, and we had the 200-day moving average right here. and I want to see it bounce, 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 hold that level, and that's where I want to buy, and I want to buy Apple right here. So I want to buy Apple on support, and here's going to be my stop loss. Let me draw another line here. Here's my stop loss, so I'm only going to risk, what is that, 7 cents, 8 cents right here for Apple, and I'm buying here, buying where it's flattening out, and now volume's pumping up, and I have this whole run all the way up to where all the amateurs and the basic and beginner money is going to be buying, because there's so many examples that we show in our video lesson that you guys just have implanted into your brain. You guys just hear it from all these other gurus and everyone. Buy the breakouts, buy the breakdowns, buy the breakout patterns, buy the patterns. And you guys have to think, well, if it's as simple as that, we would all be rich. It's not just buying a flat top thing, because anybody can go here and draw some horizontal lines and say, all right, there's a top, there's a bottom. I'm going to buy the bottom, I'm going to buy the top as soon as it breaks out. Well, if you're buying up here at the top, well, here's your risk. You have this huge risk right here. And you have to be smarter, because you know that, especially in blue chip companies, they're here to manipulate you. I mean, the only way to make money in the stock market is to be taking money from somebody else. So the hedge funds and algorithmic machines that have been around for centuries are going to beat a small money and tear us up. So we have to be smart like them, understand how they work, and buy into their washouts where they're faking everybody out and loading up their position, and then you get this insane run on Apple like it did. And Apple's done this, I think it's been 3 days in a row, and it's just shot up insane amount. So that's a little bit about how we trade, guys. We really try to think of the bigger picture. We really try not to get
let's see if
Go ahead.
Tom and Richard are able to get in real quick, because it seems like Richard and Tom are having a problem.
Tom, are you in now on your phone?
I called in on the phone, yeah.
Okay.
Can you
perfect.
see the screen?
Yeah.
Okay, what about Richard? Richard, are you there? Alejandro's trying to get him.
Oh, the dial number? Let me send you guys the dial number. It's right here.
I do have a quick question, if I can, while we're waiting.
Yes, sir. Bring me
Sure.
questions, please.
Absolutely.
Did you say a 7-cent stop on Apple? That's or
Yeah.
any stock? That's amazing.
Yeah, we are, and that's why it's so, what we do, it's so,
In and out.
that's why you have to buy on these washouts, and that's why we do it. I mean, our risk and our plays are so low risk, because like I said, this is where, let's just say, I'm going to say stupid money. This is where everybody else and all these other gurus are going to be telling you where to buy, because they want you guys to pump up the stock and do that and whatever. And that's just basic. I mean, you can go read this out of a book. You can go buy a breakout in a book at Barnes & Noble. Well, you have to be smarter, and you have to understand, let's be better than the average. The only way that we're going to succeed is to be better than the average. So if you're able to study this chart, you're going to see, wait a minute, why am I not buying into these red candlesticks as they're running into support, and I'm going to risk maybe 8 or 10 cents, and I'm willing to make, man, to the moon.
Yeah, that's right.
And
let them know why you're putting.
you're going to be able to see this time and time again, and you have to get into the mindset of, how are people taking advantage of me? And I think that that's something a lot of people don't necessarily think in the stock market. I think everybody comes to the stock market and they think it's just a pretty picture, and they think we're all going to get money, we're all going to get rich quick, and study my video lessons and buy the basic breakouts and buy your basic flag patterns and everything like that. But you guys have to say, well, wait a minute. It can't be that simple. How can I be smarter than the rest? And you have to be able to see these patterns, and you have to get into the minds of, if I were big money, how would I screw these stupid money? And you would have to say, well, I know that stupid money is going to be buying these breakouts. I know stupid money is going to be buying these flag patterns. And I know stupid money is going to be doing all these basic things, and they're not really going to study and really look into what I'm doing. So there's not much to the stock market, guys. I mean, if you have the flag patterns and you have the basic tops and bottoms, the hedge funds and algorithmic machines are saying, well, how can I take advantage of them? Well, I'm going to make a very quick, harsh, rash sell-off, and then I'm going to start loading my positions up as they're selling their positions, and then I'm going to just shoot it up and put millions and millions of dollars, because that's what this is right here, guys. And Apple from here to here, this is millions, 10s, 30s, 40s, 50 millions of dollars right here in Apple. This is not stupid money. This is smart money who's doing this. And you're able to see this time and time again. Do you guys get that? Am I...
I'd like to add one thing to that too.
Yeah, go ahead.
No, I was gonna say too, a lot of times if you're trying to play that breakout pattern towards the very top, option prices, especially if you're playing those have kind of a predetermined breakout move built into them. So if you're playing the very top there, you're going to take a harsher loss if it ends up sideways trading or goes the opposite direction, just because
Yeah.
it has that predicted breakout price built into it.
Yeah, for sure. For sure.
That's right.
And that's why, yes, and there's obviously, you guys have to know, again, what I'm preaching here is there's manipulation in the stock market. There's manipulation and people trying to take advantage of us. So where everyone else is going to buy their options here, and they're going to screw you and sell the stock off, and you're going to have your options, you're going to take a 20% loss in your options. Why not buy the options here where they're extremely, extremely, extremely cheap, and then get it up here, and then you'll have everybody else fighting. You're sitting up here with your feet up, letting them fight over here, and you're saying, all right, well, I'll take profits or I'll keep going and see who's going to win, but I'm already down here and I'm sitting in the money.
That's right.
So...
Just to clarify, the 7-cent stop is on the option, not on the center line?
No, and that's what we don't do. We really, really don't do with options. We don't give a defined stop loss. Let's say we were to buy Apple contracts today and we say, all right, we bought them at $1. I'm not going to say, all right, guys, we're going to get out at 95 cents. What we're doing is we're just playing the chart whatsoever. That's something I used to do. I used to immediately buy an option. I'd put a stop loss in. I do recommend this, but I don't do it. You have to let the chart play out and do its thing. But I don't know if you've traded with us or not, but you'll see. I mean, if we're in these trades and we're buying into these sell-offs and they don't work immediately, or we find a bottom, we're out. And we're only losing a couple pennies on the option contract because we're already buying them so low, and the option contracts aren't volatile like they would be up here where the spreads are moving 10 or 15 cents, where you have all these fighters and sellers fighting.
I think that answered it, yeah.
Does that make sense a little bit?
Yeah, that helps. Thank you.
Yes,
Yeah,
sir.
good. Any other questions? Anybody?
What else, guys? So I'll go more into depth a little bit about how we break these charts down, but I want to show you guys what you'll be seeing every day is we have 18 charts up. So we have our blue chips over here, Apple, let's just go our FANG stocks, Facebook, Amazon, Netflix, Google, as well as Apple. We have SPY here, the market. We have oil because right now, guys, we know oil is the biggest market mover right now. There's many, many different sentiments in the market. It can be the economy. It can be the value of the dollar. It can be oil. It is oil. It can be China. It can be Greece like it was last year. There's many, many different things. But right now, the only thing moving the market is oil. Everybody knows that, so we have to have it to keep an eye on oil. So, what did you say, Alejandro? Can you show a picture on screen share for people that has a problem with audio? So right here, guys, if audio's not working, you have to call in with that button. You guys see that?
I wonder who is not able to hear right now. I wonder if Richard's still...
Richard, are you there? I can see you don't have audio access. Oh, I'm sending it to Alejandro, I think.
Yeah, that one.
Oh, gosh.
Hey guys, I have a quick question. This is Matt.
Okay,
Yeah,
go ahead,
let's
buddy.
hear it.
Okay, and you don't need to spend too much time on it. It's a little bit off topic, but as far as just like touching on it real briefly, just as far as kind of like how long you've been trading and like quickly what introduces you to the market. Right.
Say it, Matt, it's really hard to hear you right now. It's like you're far away. Say it again real quick.
Yeah, I was on speaker. Is this better?
Yeah, a lot better.
Okay, so kind of just to get like, you know, a real quick background as far as like, you know, how long you guys have been trading and like,
Okay.
how you were introduced into the market.
Yeah, let me give you guys a little overview, a little, uh-oh, Richard can't hear us. Let me see if I can fix him real quick. See if we can get Richard here set up.
Anthony, are we streaming on Ticker TV?
We are not on Ticker TV.
Oh.
You think we should get on there?
Well, what's good about that is you can, if you didn't have the, you can type in your question.
You guys should be able to do it right here, right?
You have the message box?
Let's see, chat box. Okay, I got it.
Okay, perfect, perfect, perfect. I want to see if we can get Richard here set up real quick, and then we'll get going about our.
Anthony, you want to take a TV?
No, I am not. I'll get on it right now, though.
Wouldn't be a bad thought.
Oh, he said yes, huh? Richard can see.
Oh, you know what? We're actually having a. No, Ticker TV's not going to work, guys. We're having a problem with it, actually. I got to fix that later. Let's see real quick. Oh, Richard, come on. How are you doing, Johnny boy?
Oh, very good.
Man, you've been a big shot, killing it. $600 the other day.
No, I know.
You're on fire.
You're doing it.
That's exciting.
Just following you for the whole part.
That's cool. You're coming up with some good small cap stuff. You're opening my eyes. Keep that up. That's good.
Okay.
It's going to give me like 30 more seconds, guys, and we'll get started here.
Any luck?
Yeah, he should have an option to either use his computer.
Welcome. This service is provided by freeconferencecall.com.
There are 14 participants in the conference. Please announce yourself.
Albert had a problem too. Oh.
Yeah, I'm using a Mac with no problem. I wonder what Richard has, a Mac or a. Well,
Richard has a PC.
Oh, you guys couldn't see this, Alejandro was saying? A minute ago.
Can they see this?
They should be able to see everything, yeah. Dang it, Richard. Yeah, I can see he doesn't have it.
I don't see the speaker icon on my screen.
Oh, you guys can't see here on the left.
He needs a telephone.
Can you guys see my attendees list and the messages or no?
Yeah.
You guys can see, because they're saying you can't.
I don't see any attendee list, no. I see the picture that's up, that's it.
Oh.
Really? You guys, alright, now?
Nope, nothing moving.
What?
I
I see your mouse moving, but I don't see anything else.
What?
Oh my goodness.
Do you guys see the picture up? Do you guys see my the chat room in TC2000?
I see your TC2000 background in your chat room background. I can see the picture.
You see the post-it note?
Yes, I do.
Okay.
Yes.
Why are they not seeing the attendee list? If audio's not working.
Yeah, I'm confused here. Stuck? Can you hear us? All right, so Matt, are you there? I'm gonna give you a little background of us, our story, my dad and I.
Yeah.
Okay,
awesome.
so yeah, my dad and I, we started off. It was actually my dad. He was driving home one night from work, and he listened to. It was on the radio. It was what was it called?
Christian radio.
Christian radio. It was New Ventures on Wall Street, and it was a guy, and they were talking about the stock market and stuff like that. So fast forward, I was all against it. I didn't believe in it. I was like, that's stupid, blah, 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 blah. We ended up going to a little seminar, and we kind of got burnt out. We felt that it was just kind of like a rip-off. They were trying to rip us off. They were trying to sell us like $10,000 DVDs and stuff like this. So we kind of stopped for 3-4 years and didn't do anything. We followed the market, but didn't do much. And then all of a sudden, we decided to start. So we started with a couple of accounts, and we started with $3,000-$4,000 here. We had no idea what we were doing. We started
Rolling
off
stocks only.
We were doing rolling stocks, so we would look at something like I think the easiest option. Let me show you guys. So rolling stock, guys, we were just buying stuff that were we were more of swing traders and doing stuff like that. We were on E-Trade. We weren't using E-Trade Pro. We had no idea what a level 2 was. I mean, we knew nothing, guys. We had no idea. We had TC2000. What we would do is we would go through about 10,000 stocks, every single stock in the stock market every single day, and we would search for these rolling stocks. Had no idea what scanners were. Had no idea to trade blue chips. So we would be trading in the E-Trade Pro, just the web version. We had 15-minute delayed data. We'd be buying a stock. We'd be saying, "Why?"
We didn't know that.
Yeah, we had no idea. We're calling it E-Trade, yelling and saying, "What's going on? My orders aren't getting filled. The stock's moving." Blah blah blah. We would think, "Okay, we're up $1,500," and then we would sell our position. Couldn't sell it because we were putting in a limit price, and we had no idea that we were 15 minutes behind time. We had no idea what the even bid or the ask was. And then we'd sell at market, and then we'd lose $3,000, and we had no idea. So it's just been a rough road. We've lost well over $120,000 trading, and it's just been tough. I mean, nobody taught us, nothing. We just really learned the hard way, and
a lot of studying.
So that's why we're here, and we want to help you guys and give back, because it's just been a long road. And now that we've done it and we understand stuff, it's so simple. I mean, there's a lot of other people out there in our competition, and they try to preach and tell you guys that it's so hard and all this stuff, and you have to know this, and you have to. I mean, it's seriously so simple, guys. Trading these stocks, it's not even funny, and that's what we want to teach you guys and help you guys out there.
Did that answer your question, or you want a little more?
Absolutely.
Okay. Yeah, we learned the hard way and lost tons of money, so we're just trying to prevent others from doing that, and it's much better to trade in a group or in a community than by ourselves. We kind of got burnt out.
Yeah, very
it's
lonely.
It's just very lonely. Yeah, so this is great.
Yeah. So then just a little overview, guys, is you'll see, just like we are right now, you're going to see our screens every day, and we have our blue chips over here. We're studying SPY and we're studying USO. So how we trade these blue chips, which you guys know what these blue chips are, just these big stocks. We only trade options for them. So this half of the chart is only options. So what we do is we always will have all of our support and our resistance lines mapped out. We'll have the significant levels, and we're timing SPY, we're timing USO, we're timing the other blue chips, and we're all timing them together. So for instance, if I want to buy Apple, guys, and Apple's crashing into a support level, and I'm going to buy into, let's just say, a washout, you would call that. I'm buying still on a red candlestick, and I'm expecting it to hit support and go green and then bounce up like crazy like we seen it did today. Well, I'm going to be watching SPY, and I'm going to make sure that SPY's running into some support, are already running off support and pushing towards resistance and has a lot more room, as well as oil, as well as the majority of the rest of the blue chip stocks.
These two for sure.
So I think that that's something that we never did. We used to just look at one chart, guys, and we would just
15 minutes.
we would look, yeah, just at one chart, and it's all about timing everything together. You know that the blue chips, they all work together. Obviously, you know SPY consists of 75% of the whole stock market, and that's what moves the market. But Apple, Netflix, Amazon, Google, those are the biggest market cap in the stock market. So those are going to influence the stock market the most. So it's really easy when you can start seeing and reading and using them all together to build your case and say, all right, well, SPY's bouncing, Netflix is hitting support and bouncing, Apple's still crashing, but I see Apple crashing into some support. So now I'm going to say, all right, I'm going to buy Apple here as I see it start to level out. I'm going to find my stop loss, and I see everything else pushing. I see oil rallying, and here we go, bam, and you get an Apple. So it's all about timing everything together.
You guys have any questions about that and why we do that? Is that how? What do you guys think?
Question, comment on this.
Yes, sir.
Excuse me. I've been in other rooms where it's similar to this, but they're actually front running, and by the time you get the information, it's way too late.
Yes.
Yeah.
It sounds like you have a much better approach here.
Yes, sir. And that's what we are trying to do. Obviously, we want to be the best out there, and that's what we work for. And with this live audio and giving you guys access to the microphone to ask us questions, I mean, it doesn't get any better than that.
We really
at all.
try to alert before we get into trade. Sometimes it doesn't work out perfectly, but we really try to let you know before we enter the trade, and right after we enter, we want to let you know what the stop loss is, and we really want you to use those stops so that you can just get ready for another trade if it's a loser.
Yeah, but no, I'm talking the whole time. All right, guys, Apple's running into the support. Apple's running the support. I don't know if you've seen in our YouTube videos or live trading videos, but I mean, I'm talking the whole time, and people are asking questions the whole entire time. I mean, it's, yeah, nonstop. All right, guys, I'm seeing on the level 2, I'm seeing $1, I'm seeing $1.02, I'm seeing $1.03. I'm trying to get in at $1. I'm going to put my order in now. All right, guys, I got filled at 102. Let's go. And then I have my dad next to me, and he's just moderating the chat room. So he's typing everything I'm saying. So, I mean, it doesn't get any faster than that.
Go ahead.
It sounds like the other gentleman might have been in warrior training, because I was in there for a month, and you cannot follow along with the scalp moves. They're too fast.
Yeah.
Yeah, that's another thing to comment on is speed keys, guys. We don't use speed keys. That's absolutely ridiculous. I don't think that's a way to trade, and especially if you're going to run a chat room and try to help other people succeed, there's just no way that you can use speed keys. I mean, it's impossible. I don't think I even need to defend that.
Right, because sometimes you'll be in a trade for about 15 seconds, and by the time he's out, you're getting in.
Yeah. You missed it.
And especially with these small caps, I mean, I can go off on an hour and talk about how they're using you guys, but I don't want to do that, and that's why we trade these blue chips too. I mean, there's no market manipulation with us whatsoever, and there's millions of dollars going in within split seconds.
What I like too is you'll be in a small cap for maybe sometimes 20, 30 minutes, so there's plenty of time to enter, and you can exit in, at your own time frame.
Yeah,
that's right.
What I'm really also trying to do for you guys is I'm understanding that there's many different traders. There's traders that want to trade and they want to be in a trade for 10 seconds. There's traders that want to be in a trade for 30 minutes, and there's traders that want to be in trades all day long and then take profits at the end of the day. So what I'm really working on is I'm trying to say, all right, guys, how can I find some small caps that we're going to have our quick little 10-15% runners in the morning, and everybody's going to make money on that, as well as the blue chips. Now, wait a minute. What is going to be the daily trend, and how can I find the daily trend in these stocks, and we can hold a position for hours on hours and sell those positions? So I'm trying to really work hard and really understand that for you guys. It's been very difficult with this market without much volume or much direction. But yes, that's also something that I want to put out there that I'm really trying to work on for everybody, because there's many different traders out here.
Let's get
So
back
how
to
many open positions might you have at one time?
3.
3, maybe 4 at the most. I mean, there's not a bunch. Yeah, there's not much. But yeah, I mean, what I do is, obviously there's 18 charts up here. I mean, I'm talking like a robot. My tongue gets twisted over here. I'm talking so fast a lot of the times. And I just really stress that people who are new here and stuff, they just really try to understand what we're doing and how we trade, because we really trade a lot different than the most. And just focus on, you know, a couple trades. That's it. I mean, you guys can see 1 or 2 trades. That's all you need. And there's 50% runners and stuff like that.
That's right.
How do you guys determine position size?
Position size is, I don't know how to really.
Everybody's different.
Everybody's different. I mean, we kind of trade a certain way, but no, we don't really. How can I say
It's
this?
up to the individual.
Yeah, it's really just up to you and your risk. And what we really stress is the 3 points of interest is how we trade, which is your where you plan to buy, where your stop loss is, and where your expected profit target is. So if we plan, let me pull up a chart and I can explain that to you guys. Where would be a good chart here? Let's pull up like MNKD, for instance. Let's go to Apple. So guys, let's just do Apple on more of like a monthly chart. And I'm just going to do our 3 points of interest real quick so you guys get an understanding of like how our mindset works before every trade. So Apple right here, I want to just make 3 lines. And I want to say, all right, well, if I'm looking to long Apple, I can see that there's some resistance here. You see the top of that candlestick. So now I'm going to go back in time and see if this is a really significant level or if it's just a significant level within the last few days. So you can see, wow, it's significant level. There's resistance there, support. It was support here and bounced off it. It was a very, very resistance here, support here, support, support, support. So we know that Apple, guys, is very, very, very significant level here at $112.13. So we say, all right, well, we know now that we want to take a position long over Apple over 112.13 because why? There's bulls and bears fighting right here. And if we can get over it, then we beat the bears, and now all the bulls are going to come in and the stock's going to rally and it's going to push up. So what's the next thing we need to do is we need to figure out, well, if we do break this 112.13, well, where's our next resistance level and where do we plan to take profits? So what's that going to be? That's going to be our next resistance level. So you can see right here, I just quickly drew this and I can see that right here, you can see that candlestick shot right back up. That tells me there's a lot of money in this section because the candlestick hit that and it shot right back up. A lot of money right there. You can see right here, support, support, resistance. So you can just go all the way back and you can see, wow, these points really make a lot of sense. So you guys will see on my charts a lot of the times the green line is where I plan to buy it. The white line is where I expect it to go. All right, so now we need our next line, which is going to be our stop loss. So I'm going to have a very, very close stop loss. And let's say right here, I can see some, it was some resistance here. It's some support here, support, and resistance, blah, 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 all the way down the long. So I'm going to make this yellow. And what am I doing here for Apple? Okay, so Apple, I'm willing to risk $1, and I'm expecting to make 2. So it's not a very good risk to reward ratio here for Apple whatsoever. I'd probably put a closer stop loss, and I'd find something a lot closer where it's more of a 5-to-1 risk to reward ratio. So for Apple, I'd only risk, 50 cents and expect to make $2.50. So that's how we trade with every single one of our trades. We need a very good risk to reward ratio.
Now let's see if you were going to short it.
So let me show you guys on our swing trade watch list here. You can see on all of our swing trade watch lists we do right here. So we plan to long it at 111.18. We have our stop loss here at 110.15, and our expected profit target is 115. So here we're risking $1 and we're expecting to make 5. So what is that? We're risking 1 to 5. Again, here, short. If we plan to short this at 107.53, we expect it to go to 104.41, and our stop loss here is going to be 108.62. So we're risking $1 again, expecting to make a 3-to-1, 4-to-1 risk to reward ratio. Does that make sense to you guys?
Just a quick comment on that one. The language right there that you're pointing at, that's above the chart, is a little wrong on where it says long. What you just said is correct, obviously, but where it says long 111 with room to run to 110.
115.
Well, it says 110 just above the chart on my swing trader.
Oh, you're right. Thank you for catching that. Wow.
Sure.
Wow, yes, thank you. I will change that. Thank you, thank
The
you.
chart was correct.
Yeah.
Pretty obvious.
Okay, good. Thank you for that. I'll fix that for sure. So another thing, guys, to touch on is, oh wow, we're not biased. A lot of traders, you know, they really stress fundamental analysis and stuff like that. Trust me, we've been around it. That's actually really one of the biggest things that we started with was fundamental analysis. We would be reading the news. We'd study the books. We'd study everything for these stocks. But what we decided, we went on a thing for probably 6 months where we were trying to understand, how do we value a company? How do we value a company? How do we break down? And we had equations after equations after equations trying to understand this stuff.
And they never worked.
And they never worked, because if we knew how to value a company, if anybody did, we'd all be billionaires right now. So that's something that we do not do. We do not be biased, and we say, guys, if you're biased, you're going to fail, you're going to lose. And that is how the hedge funds, augment machines, the stock market in a whole will have an advantage over you. We're trying to fight the stock market. So if we come into the stock market, we need to be as unbiased as we can, and we have to react to everything. So you'll see, guys, I don't just make a watch list and I say I'm looking to long Apple over $111. I say, guys, I'm looking to long Apple over $111, and I'm looking to short Apple under $110.30, for instance. I'm not biased, long or short. I don't care if we come to the market tomorrow, if the market's red or if the market's green. I could care less. All I know is I'm going to find my pivotal points, the price action, where all the money's going to come in on these stocks, and I'm just going to react to it. I don't care what the news is. Yes, I do watch the news, and I understand what's happening in the market, the market sentiment, and if the market is going to be strong, and if we're going to continue to have some strength, or if the market's going to be sideways and weak and all that. Yes, but you don't need to go and study Apple for 30 minutes before the market opens and try to get an understanding what's going to happen. Yeah. So if you guys come in biased, you're going to fail. That's many things we see all the time. For instance, Tesla last week, when the cars came out, Tesla completely crashed the whole entire day before they had their press release for the cars, which was supposed to be good news, which it was. It crashed all day long. Why? Because the hedge funds were selling it off, scaring everybody, and then what they do, they loaded up their positions and shot it right back up. And then the day that the news actually came out, Tesla was actually it gapped up, and then it sold off all day. Yeah. And there were so many people that lost so much money, hundreds and hundreds of percentage on their options, because they were so biased. It's good news. It's good news. It's good news. Tesla has to go up. Tesla's going to go to the moon. Yeah. And then they would be down on their position 40 or 60%. And then they'd say, I'm going to hold it overnight. And then the next day they'd be down 80%. And then they're stuck in a pickle. There's nothing they can do except for ride it all the way down until it gets down to 100%, and they lose it all. Yeah. So that's just a good example, guys. You cannot be biased. If it breaks a line, it breaks your stop loss line, get out, re-enter. It takes 3 seconds to get back into a trade.
Small losses.
What other questions, guys?
That's another point too that's important to add. We're not greedy traders, so when we're up, we got a good size amount of profit that day. It's good to lock that in too.
Yeah.
Trying to be long investors here.
That's right.
Yes, sir. Yeah.
That's right.
Without a doubt, guys.
Looking at some of the videos, it looks like you're obviously buying out of the money, quite a bit out of the money. You probably tried everything, got the money out of the money, and you found a sweet spot.
With that, it's different in every situation. First of all, what I'll look at for buying in or out of the money is the market strength. Do I think that the market's really going to push? Or do I think that the market's going to be sideways and we're just getting a quick little 5 or 10 minute trade for a little bit of momentum and then that's it? Secondly, will be the option chain. I'm reading where the volume's at. Is there volume in the 206.50 calls, or is there more volume in the 206.50 calls? And then with that, I'll pull up both of their level 2s and I'll say, okay, well, I'm reading the level 2s, which are jumping around the most? And if they are jumping around, where am I finding support? And where am I seeing where I can see a little bit of a wall, a little holdup? And I know that I can get into a pullback into that little holdup where I'm seeing the holdup in that level 2. And if we break that, then I know it's weak and I'm out. So that's always different. I'm looking at the delta, I'm looking at the theta, and I'm really reading that. What's the best bang for my buck?
Jason just asked a question here. I wonder, go back up a little bit and see what he was asking right there. Oh, so you just got done.
Yeah. So guys, it's different in each situation, but the main thing to really say is that you just have to be able to read the level 2 and understand where you can see that there's some volume and it's holding. But most of the time, we're out of the money about 50 cents to $1, expecting it to go there. Or if we think that we're at Tesla, let's say at $250 and we're on support and our next resistance line for Tesla is $255, well then let's go in the middle and let's buy out of the money at $250 and hit that. And then when we hit 255, our option's just going to blow up and we're going to make all kinds of money.
How's that sound? You understand?
Does that make sense a little bit, guys?
Yeah, just to add to that too, I mean, for me personally, when I'm looking at the option chain, like I said, the risk to reward has to make sense according to delta. Do I think it's going to be a really quick move? I'll go with a higher delta. Do I think it's going to be, a bigger move? It's going to take a little time. Maybe I can go with a lower delta, lower some risk there. And
Yeah.
I also just like to make sure if I'm going to play an option, I want to make sure that particular option and data has plenty of volume on it. So
looking to day trade that, get in and out. I like to look for 500 plus traded on that particular option. If it's throughout the day, that way I know I can sell it quick.
Yeah,
That's right.
for sure. And guys, a lot of it's hilarious to me. A lot of these small cap guys, they talk about how options are so bad and how they're so risky. And it seriously makes my stomach upset. Man, they're just so stuck in their old ways and they haven't, really studied or broadened their horizon of what's out there. And they try to talk on options and kind of put fear into options for some reason. I have not the slightest clue of why. They talk about how there's not enough liquidity or something like that. There's so much liquidity in these Apple and these blue chip options, and that's all we trade. They're blue chip options. We don't trade like, let's say Lulu or stocks at $30. We don't trade those options because there is no volume there. But the 5 or 6 FANG stocks, blue chip stocks, there's so much liquidity, guys. You can put $100,000 into a trade and get out of the trade within a split second. So it's just disgusting to me. These other guys, how they try to put fear and say, you guys have to learn the small caps. You guys have to trade the small caps. And you guys are aiming for 4 or 5% returns a day. It's just absolutely disgusting to me. But
some don't even know how to trade options.
Yeah, some of them don't even know how to trade options. And somebody else the other day actually told me that they don't even know the definition of short selling. Some so-called guru has a video at a webinar that he did. So yeah, you guys have to really, really watch that because it's there's just so much fear that they're trying to put into your guys'. Yeah, I just don't get it. I mean, we're all here to tell you guys it's so simple because it really is.
We got another question here from Phil that just came in.
Okay, how do you determine when to take profits? Phil, it's just price action. So when I'm in a trade, I don't put numbers on that. I think that that's good for people with small accounts. Yes, if you're trading with a $500 account and you make 50, 60 bucks, yeah, take your profits, be good, be happy, and go to the next. But ours is just price action. I mean, if we're trading Apple, let me show you Apple here. And we're on Apple this morning, let's say, because we caught this trade yesterday, same exact trade like this on Apple yesterday into a sell-off. And we see Apple just shot right back up. Immediately, yes, we're going to be looking to take some profits. You can see Apple 111.50. That is a resistance level, 111.50. The $half mark for all these blue chips and small caps, every stock in the stock market, the $half and the full dollar mark are resistance or support levels. Yeah. So when we get close to this and we have a crazy run like this for Apple, for sure we'll get ready to sell it into this 111.50 because number one, that's when our option price is going to be worth the absolute most, because if we're selling at resistance on Apple right now, you're still going to have people buying those options just right now, expecting to break that resistance level and keep going to the moon because they're just delirious and lost their mind. So if we can sell it there, we'll get an extra, let's just say 10 cents on our option contract. Whereas if we were to let it pull back, and let's just say we were to sell it 4 minutes later at the same exact price, we're still not going to get the premium or the high value on our option contract. So yes, a lot of the times we will sell into resistance levels, or we'll sell right when we see Apple kind of slow down, pull around, and start consolidating, and we'll get out. Because, for instance, if Apple were to hit this 111.50, well, you can say you could take a gamble and you could read the rest of the markets, but you're gambling at this point. And I say to everyone, it's fine to gamble once you're at this point, because you can either hold this 50 support and you could run up, or you can hold this 50 support and crash down. It's fine to gamble at that situation if you're already down here and you're sitting on big profits and you say, all right, well, and this is where your greed comes in, but all right, well, I'm willing to risk 4 or 5 cents of my option contract to make an expected target of an extra 20 or something like that. Then yeah, that's something you can do, but only when you're sitting on a very good trade.
Right. As you're moving up in the green, you want to make sure you're inching your stop loss up with that. That way you still give it room to run in case you have something that's slowly turning, but you want to make sure the stop loss, you're not going to get the whole trade back.
Yeah, for sure, without a doubt. Yeah, when you're at this situation at a $0.50 mark, I mean, you're playing about 11.45, 11.42, you're out. You're risking that 8 cents of, there's no way you're going to let it go all the way down.
Yeah, we try to call that out also, when you should be taking profits. We try to stress that.
Yeah. Chris, our video lessons has a lot of hours of like technical analysis and how we draw our charts, and a lot about what we're talking about today is how we're able to outsmart the hedge funds and algorithmic machines, and where we're looking to buy into levels like this, and a lot of stuff like that. Yes, the video lessons are highly recommended, because you need to come every morning to the chat room, and you need to be able to draw these lines, and you need to understand what's going on in our head and why we're buying here and why we're buying here, because you guys are going to learn our strategy is a lot different than a lot of people. I mean, we're buying into these sell-offs. Most people aren't going to be doing that, and that's why we're better and make very low risk plays with a lot more high potential than the rest.
I have a question on option commissions. I know they're part of doing business, but have you found a company with good deals and low commissions?
You know, we use for options, we've just used E-Trade. We've used E-Trade forever. To be honest with you, I don't know. I wish Seattle Josh was in here. He knows all of that stuff. Kerwin, do you have any input on that? I know he has some input, and then I know also Justin has some input too about some dough rates or something like that, Thinkorswim.
Yeah,
go ahead. No, I was just going to say, for dough rates, I recommend those if you have a smaller size account. Not affiliated with them by no means, but if you have a smaller account, dough rates are $1.50, flat fee, $1.50 in, $1.50 out per option. So if you have a $500 or $1,000 account, if you're going to be trading 2 or 3 options at a time, you're paying a total of $3 per option for in and out with no base fee. So that makes sense, but if you have a bigger account and you can get a better rate, maybe you're paying $4.99 and you're getting 40-cent options. I mean, it kind of depends on how much money you have to play with.
Yeah. What I recommend, guys, I really do. I mean, I really recommend SureTrader. I actually we just opened up a SureTrader account where we started with a $500 account. We're working on something to show you guys how we grow an account. It's pretty exciting because we're already up pretty big on it, and I mean, we're just trading 2 or 3 trades a day on that small account, and we're making 30, 40, 50% runners, 100% runners at sometimes, and man, I recommend that. I really do. I love the platform. I love it. I have my E-Trade up also. So the only thing I don't like about SureTrader is the options. They don't tell you the delta, theta, and all the Greeks, but I have my E-Trade up, and obviously I'm explaining that to you guys in the chat room and stuff, but SureTrader, I mean, it's the way to go. So, what else, guys? Any other questions? What do you guys want me to go over?
Did that answer your question, Chris?
Chris was asking about the video lessons. I don't know who.
How
How much importance do you put into types of candlesticks and candlestick formations?
What do you mean? Are you talking about patterns, or are you just talking about like how we read the price action close to significant levels?
I'm talking about like like a hanging man candle or something like that. Do you
Yes.
watch a lot of the actual candle formations to study those?
Yes, and that's something that you guys are going to see. What we really do with our mentorship and with everybody is we try to say, all right, guys, number one, you need to understand your technical analysis, just the basic horizontal lines. Once you get that and you're able to see it on the snap of a finger, you don't even need to draw your lines anymore because you can see the multi-month, intraday support and resistance levels. Then it's going to be, you have your levels. Now what do you need to do? You need to learn how to read the price action as you get to these levels, which what is price action? It's timing the market and all of the other stocks, especially the blue chips let's talk about, together, and it's being able to read these candlesticks and being able to read, not really, Justin, do I say, oh, this is a hanging man, this is this? It's as simple as these candlesticks, guys. It's as simple as reading the candlesticks. I mean, it's that simple. You don't need to know the definitions of what these are. You can see that these candlesticks right here are weak. You can see that they shot up and they shot right back down. So what do you know? You know that there's sellers here. You know that there's sellers here. You can see some indecision candlesticks. If we have an indecision candlestick and it's close to some support, well, it looks good to me because there's not too many sellers in there and it's holding that level. So now that it's not selling off, well, optimistic buyers are going to come in and pump it right back up like it did. And I'm going to read what's going to happen now. For instance, let's say we were in this trade right here for Apple and it shot all the way up here. Well, I'm going to read the candlesticks and understand what's going to happen. And that, guys, is something that you're just going to have to see time and time and time and time again. Mm-hmm. And eventually, at the snap of your fingers, you're going to be able to read it. Mm-hmm. But there's so much more than looking at one chart, guys. You have to be able to read all of these together and understand the mood and the sentiment for the candlesticks and the market. And
that's right.
Is if Apple's here and Apple's fighting the $0.50 mark, and we're up 50 cents on it, are we going to take profits now, or are we going to give it 4 or 8 cents to lose of our profits because we expect SPY is breaking and holding the $0.50 mark and is going to keep pushing up, as well as oil, as well as the other blue chips are now just consolidating under the 200-day moving average and now are popping over it. So now we know that the market is very bullish, so now we're going to hold Apple for a couple more seconds and bam, there goes Apple. Does that make sense a little bit?
Yeah.
Awesome. So no, we are not option biased. We trade small caps. We trade the stocks under $20. Yes, quite a bit. So we do half and half. Yes, I do like options better. It's the best bang for your buck. There's obviously a lot more to be made. Very rarely are you going to make hundreds of % a day trading stocks. It's impossible. Mm-hmm. So yes, options are the best thing ever. If it weren't for options, I probably wouldn't be in the stock market at all.
More predictable.
So, yes, sir.
I think Phil missed a lot.
Quick question. I have your lessons and y'all got quick question as far as what's in there. Do you happen to have a recorded video of kind of reading the level too? What you see to be able to kind of like, be able to use your position?
No, and that's something we're working on right now. I mean, we're completely, the video lessons, you guys probably don't know, they're extremely cheap right now, and there's a lot that we're adding to them still, such as videos like that and live trading and in-depth of reading level 2. So yes, those are coming soon. You guys got a discounted price that you're locking in, and yeah, you guys will have that, and we're going to continue adding to them all the time. Yes.
Okay, great.
Yes, sir. Yeah.
What else? Level 2.
How do you know what strike price is about?
Strike price? So yeah, that's just choosing the option, Kerwin. Again, just off where the volume's at, where we're seeing on the level 2, where we expect the stock to go, where the delta is. So the delta, which would be the price change and how much the option moves versus the option. Yeah, stuff like that. We talked about that. Does everybody get that, or you guys want me to go over it again? So I'm going to let Justin say this one. Justin, go ahead.
Sorry, what was
was the exact question you want to go over?
Kerwin's asking again about how we pick what option strike to choose.
All right. As far as in the money, out of the money,
I really don't think that matters too much. We're not,
at least I'm not. I don't think we're really looking to execute these type of stocks. So I don't put too much emphasis on that. I do like to pick the delta based on how quick of a move I think it's going to be. If I think it's only going to be, a really quick channel move, in and out in a couple minutes, I'll go with a higher delta. It really depends on your, risk reward in that situation. If it's going to be a longer, kind of turning up the chart kind of thing, I'll go with a smaller delta. I like to look at how much volume on that particular option expiration, strike price, how much volume's on there to make sure we can get in and out, I don't pay too much attention to the theta. I'm not looking, holding for a long time. In the past, I used to look at the gamma too, but even the way that we trade here, and how quick Anthony gets in and out of these trades, if we're getting in on the pullback, we're not worried about gamma because that predetermined move is not really built into the option price that we're trying to hurt us.
Yeah, and guys, I don't know, and this is something that can get you guys really confused about options, is there's a lot of, you guys are going to hear people selling premium for options and letting options expire. We do not let our options expire. That is, and then on top of that as well as straddles and strangles, and those actually, straddles and strangles are very good if you're going to have a sideways market, and that's something we may be getting into right now. If the market's going to continue to be sideways, I don't think it's going to, because we have earnings season coming up, so we're going to get some volatility in these markets. But like these bear spreads and bull call, all these different things, guys, I think they're freaking asinine, because what you're doing is you're putting on two different positions for options, one of them where you're going to succeed and one of them where you're going to fail. So now you're saying, all right, well, I'm going to put half my money here, half my money here. Number one, you're only putting half your money and you're only going to win on half sides. So you're only going to make half the profits you could. And then you're going to let your option expire. And you guys know that theta kills your option. So if you bought an option a month out and it was $32 for Amazon, well, guess what? Within 3 weeks, 21 days, that option, no matter what, if the stock even goes up $20, is going to be a $3 option contract. And then people are letting those expire and collecting premium, which would be the difference paid and all this stuff. That is not how we trade options. We trade options where we're in them and we're out of them. We do not let them expire. And we don't collect the premium. We just collect the price change. And we just like a stock share. If you were to buy a stock at $1 and it went up to $1.70, you're selling it.
And they're weekly.
We trade weekly.
The we keep it, the better.
Yeah, the less we keep. And when we do swing trade these options, we swing trade about 3 months out, where theta doesn't kick in until I think it's the 46th or 47th day. I don't know exactly what day theta kicks in, but we'll buy these contracts like Amazon. We bought Amazon May 13th. We bought some 600 calls and we locked in, I think, 40-50%. Theta didn't kick in whatsoever. So it was a very, very, very low risk play, because we bought at $32 per contract. The higher you buy the contracts price wise, the less risk you're going to take. Obviously, the less reward. But if you sell your contract at $30, you're only risking $2 out of 30. It's a very, very small percentage change. You're only losing maybe 10%. So there's a completely different strategy with choosing options. But when we swing trade, we buy them mostly 3 months out. Sometimes we'll buy weekly. Like Tesla this week, we bought weekly. But when we day trade, it's just weekly option expiration.
What about VWAP?
I learned the hard way in the trading, we can never control generally how much money we're going to make, but we almost always have control how much we're going to lose.
Yes,
right. Absolutely.
In the long term, if you want to be doing this and be successful for years to come, you have to. It's all about managing your risk and how much you're going to lose, and knowing when to cut it.
Yeah,
100%.
And that's what we're about here, guys. You'll hear my dad in the background. Get out, get out, get out. I mean, he's nonstop telling us. But yes, I mean, our losses are to a minimal to what we make. Yes. And then Aaron right here is asking about VWAP. We actually just want a little bit of a ramble about that the other day about VWAP. And all these secondary indicators. I can see Kerwin laughing over here. But I think secondary indicators as well as VWAP, especially VWAP. I mean, this just touched my heart because I'm so angry that there's these other people that are selling courses for level 2 and for VWAP, and they're like $400, $500 courses of how to understand VWAP and how to understand the level 2. VWAP is absolutely the biggest absolute garbage that I've ever seen. I truly believe, guys, and you guys have to know this about us. We're here because we want to help you guys, and we're here and we're telling you guys it's simple. It's very simple. Everybody else is telling you it's hard, and they're trying to throw things in your face and say VWAP, RSI, this, that, blah, blah, blah. You need to learn how to read a level 2 to the depths, and you need to study my 4-hour course, and that's going to be $400, guys. VWAP is absolutely ridiculous. We put it on a video, and VWAP was 50 cents away from where the stock was, and they use it like a 200-day moving average, something's bounced, it's volume weighted, where the price should be with the volume. So it's another one where it should be, where it should be, where it should be, just like if you're valuing a stock, where it should be, where it should be. It's absolutely ridiculous. Secondary indicators to me, I hate them. And it's another thing, again, I fight secondary indicators. I spent 6 months of my life just studying secondary indicators, understanding the math behind them and the equations, how they work, because I was thinking, why do I keep failing in the stock market? Why do I keep failing? I need to understand all these secondary indicators. I hear all these other people selling $500 courses for them, and they're absolute bullcrap. And the hedge funds, again, and algorithmic machines, what? Who created these secondary indicators? Them. And who studied them, and who understands these secondary indicators more than you? Algorithmic machines, mathematicians, hedge funds. So what can they do with that? Take advantage of you again with these secondary indicators. And you see it time and time and time and time again. What happens with secondary indicators? You freeze, you get bias, and you say, it's holding that secondary indicator. It has to go to VWAP. It has to do this. It's going to work, and you're done.
Yep.
You're taken advantage of. Before you can even look the other way, it's done. So secondary indicators, I hate them. I don't trade them. Please listen. I mean, I have worked on them, guys, for 6 months. I understand them like the back of my hand. You don't need secondary indicators. You just need to be able to read the chart. You need to know your 3 points of interest, and you need to know how to read the price action, which is the candlesticks, timing it with the rest of the market and volume, and understand what's happening.
Yeah, I found the less distractions I have on my charts better. I mean, just like you do, I run the moving averages, and I study the candlesticks, and that tells me everything I need to know.
Yeah. Yes, sir. Yes, sir. So what other questions, guys? You guys are giving us some good questions.
Talk about your transitions.
Okay, yeah, the transitions. So another thing, guys, that I'm telling the members that I'm mentoring and stuff like that, there's going to be many transitions. Like I explained to you, the first thing you need to understand, I'm talking to you because now I'm helping you out, is you first have to understand your basic technical analysis, understand how to do these. Second, you're going to learn how to read the price action. Third, you're going to be able to learn how to time everything with the rest of the market. Fourth, you're going to be able to how to get your entries perfect, because that you have to be spot on with your entries, and you guys are going to get that. It's easy, especially with me helping you. And then fifth, guys, once you have those down, it's going to be extremely simple. But what's going to happen now is your emotion's going to come in, greed's going to come in, and arrogance is going to come in. And you guys are going to start making money, you guys are going to start doing good, you're going to get it, and then bam, you're going to hit these transitions, you're going to hit these plateaus, you're going to hit these different points in your career of trading the stock market. And there's going to be times where I'm going to give you guys a story of what my dad and I did. Is when we first started doing it, we were making money and we were trading these blue chips. We finally understood. We didn't know technical analysis, but we were doing the basic, just kind of rolling pattern stuff. We were kind of reading the news, understood that all this good news was coming out for Apple and the markets were all good and everything was good. Just amateurs using all our secondary indicators. And what we did was we would buy Apple, Google, and Amazon, let's say, and we'd put $10,000 into each one, and then that day we'd be down 80%. The next day we'd be down 70%. We'd go back down to 80%. We're buying weekly options. And then by Friday, all of a sudden, because the market was extremely just sickening volatile at this time, we ended up making $2,000 or $3,000 on each one. So what happened to us is we got arrogant and we got into bad habits that were, don't cut your losses. I remember telling my dad, man, we're never going to lose money. All we got to do is keep holding it. We're never going to lose money no matter how much we go down. I remember saying that. We made a bunch of money doing that a couple of weeks when the volatility was just insane in the market, and you would have those kind of moves. The next week, we put $70,000 into Apple, Netflix, Amazon, Google, Tesla. Bam. That week, done, lost 70 grand in a week, had no idea, we're sick. That was most of our account. And that's a transition you guys are going to have to go to. You guys are going to start saying, oh, it works out, oh, it works out. I have it figured out. I have it figured out.
Rules.
And it's just, yeah, it's bad. You guys are going to break these rules. No matter how many times I put them into your brain and say, don't. You're going to break these rules. You're going to be playing the edge. If Apple's right here and it's playing here, I'm saying, all right, guys, let's get out. You're going to say, oh, last time it went down just a little bit and then it shot right back up and I made an extra couple $100. Well, that's one time it happened, and you're going to get in that habit, and you're going to fight, and you're going to fight that line. So that's just another thing we're here reminding you guys and helping you out and trying to hold your hand, because
we have to be disciplined.
You're going to go through these, and you have to be very, very disciplined.
So Aaron's asking some questions.
What's UOA? Anybody know what UOA is? Yes, there's some scanners like that, Aaron, but and that's something I did study, but no, because what you're going to have is these unusual option volume, and you're going to have it in really stocks that aren't volatile. Number one, when you get unusual option volume, you're going to be way, way late to the punch anyway. You're going to be buying the you're going to be pumping up the option because you're not the first to the punch, and that's something we're so try to get is we're the first ones to the option. So no, you're already late to the party, and most of the time, unusual option volume is in stocks that are like $30 or $40 that don't even have any option volume, and whenever the stock does do good, those pop up on the scanner, and that's how you see them.
Part of the question, though.
So yeah, best pivot points, technical analysis, time and sells, yes. Level 2, yes. That's how we trade. Price action. Just reacting to what's happening. Yes, sir.
We switch to, especially when you're busy, we're not looking for people to jump right in and use, a lot of talent. You have plenty of time to take in a lot of knowledge and use the paper trading account to your advantage.
Yeah,
absolutely,
for sure. There's no rush here, guys. I'm going to tell you straight up, this is not a get rich quick overnight scheme that you're going to hear everybody everywhere else. I mean, you could look at our numbers and you can see that, yeah, there's huge percentage returns, but it's going to be a lot of hard work, and it's going to be a perfection and a craft that you have to understand and be very good at. And you have to really get familiar with your platform. You have to really be familiar with being able to get in and out of your trades and not make any mistakes, because one trade isn't going to make you rich, but one trade can kill you and completely destroy you, and your trading career is done. What else, guys?
Talk on time frames. Do you find yourself looking at the 5 minute, 15 minute, 30 minute? How do you? What's your preference on that?
I've tried out a lot of different ones, but I really like the 1 minute the most. I know you, Justin, like looking at a 5 minute and a 15 minute. But I like looking at a 1 minute the most. 1 minute is what I like. That's where I can read the price action. That's where I can understand stuff. I could easily read the candlesticks. If the market is extremely directional, going in one direction, and we're in a strong uptrend with the SPY and stuff, which we haven't been in the last year, the SPY has been completely up and down, sideways as it gets, then yeah, I'll put in a 5 minute candlestick and kind of just let my profits ride on a uptrending stock. But no, right now with markets completely sideways, volatile, weak, all the different things we've been having, I'm on a 1 minute for sure.
Yeah, I have a personal question. My others, I signed up for the trial swing trader, but I'm interested in the day trading. What should I do?
Yeah, there's also a free week trial for the day trader. Have you tried that one out?
I have not. Oh, there it is. I just found it.
Yeah, just go there, sign up, and we'll be here every day, just like this, talking, and you'll see our screens, and we'll help you out.
Okay, I had a little trouble signing in tonight. I called you on the phone. Somebody else mentioned they had trouble getting into the chat room.
You know, I'm not sure. What was the problem here? What was your problem?
Mine is I kept clicking on the phone icon and I just would not connect.
Oh, you're Richard. Yes.
I'm Tom.
Oh, you're Tom. Okay. Yeah, Richard was having the problem too, and I don't know. I have no idea. What was it when you were clicking on the phone?
I just clicked on and it wouldn't activate, so I just called in on my phone.
Man, that's weird because I mean it's to us it's simple as just pushing the thing and calling in on the computer. So I don't know.
Anthony, are you able to push the live audio button now and have it pull up?
So yeah, if you can see right here, Tom, you'll see the chat room right here. I don't know, you probably haven't seen it. This is our blue chip small cap watch list that I explained earlier. Amazon and all these short and long lines. We expect you guys to draw your horizontal lines at these levels and you guys to be monitoring these stocks, and you'll read the price action as we get to these levels and you'll hear us talking about it. But yeah, our chat room's here, our live audio and screen share. You just have the button, you click on it in the morning, and if you want to call like you called in today, here's the number, the access code, or you can just push the button and join the online meeting like we're in now.
Okay, well, I'll sign up for the DayTrading when we're done here and give it a try tomorrow.
Awesome.
All right, sounds good.
We're glad to have you. What other questions, guys? Alejandro, we haven't heard you much tonight. How are you doing?
Haven't heard Manu either.
How am I new? We haven't heard you either, Stuck.
I'll throw
I'll throw another question in there whether your mic's up.
Okay.
Do you guys find yourself, do you use the Fibonacci retracements or Bollinger Bands? Do you ever pull anything like that up on your chart?
Fibonacci, guys, and that's something that I've explained quite a bit to Kerwin and Alejandro, because those are the two that I've been working with lately. Fibonacci is great. Yes, I love Fibonacci. I think Fibonacci is great, but it is better to draw your own lines and do it yourself because you're studying the chart, you're breaking it down further than just having Fibonacci. Most of the time, Fibonacci and your lines are going to be very, very similar. So if you're having a hard time drawing a chart, then use your Fibonacci, but I don't use it. I really recommend drawing your own horizontal lines. But let's put up a Fibonacci retracement here. You guys know Fibonacci is as simple as you go from the high into the low. And you guys can see here that, look, I put my lines here, and look at the Fibonacci lines are in the same exact spot. Another reason I don't like Fibonacci too much is I would rather have my own lines because they're closer, they're more exact, they work more. And Fibonacci right now is just going to work for like a monthly basis. It's not really going to help you for an intraday unless you were to break it down into an intraday, which I don't think is too great. But draw your own lines. That's what I think. Fibonacci, again, algorithmic machines, that's where they're at. That's what Fibonacci is. This is where the bulls and bears are fighting. Algorithmic machines, that's where people are going to be taking advantage of you. Learn how to get in at different levels from here because they're going to tear you up and eat you alive.
I just want to throw out there too, the importance of having a community like this, whether you're brand new or you've been trading for a long time. Multiple sets of eyes. Some people are pulling up scanners. Some people are
watching the same stocks as you, and we're calling, what we see as we go.
Can really prove beneficial.
Yeah.
On something better.
Yeah,
sure does.
and that's so cool because Joshua Stout the other day, he I was talking about Facebook, and I haven't traded Facebook for quite a while because it's just been so volatile and it hasn't really been too directional. And he actually I put on the watch list, and he actually called it out in the morning. Hey guys, why don't you look at Facebook? What do you think? And we actually hit Facebook, and we made like a 40-50% return. A lot of us in the chat room,
That's right.
as well as Jason called out Apple the other day. I was talking about it, and I was talking, hey guys, let's get a reversal over here. Let's give it. And then I had my eyes because I'm looking at 18 different charts. And he said, hey, wait a minute, are you still looking at Apple? And we got it, and we made 40-50% on Apple. So yeah, it's very important that we have a big community. People are comfortable, and they're now, Jason, Joshua Stout, and many of you guys are really starting to see our strategy and are able to follow along and follow the trades and help alert them.
Swing trade. Oh, there's
Hey,
Manu.
Manu, how are you? Oh, dang it. Yeah. Well, Manu, we really go over that in our video lessons, but delta, just the basic, I'm just going to give you the simple, I'm not going to really give you the definition, but delta is just the change in the option price. So say Apple, we buy Apple at $110, and let's say we buy our option contract at $1. Well, if Apple moves up to $111 and our delta is 40 cents, we expect when Apple goes to $1.11, up $1, 1 point, then our option contract is going to be worth now $1.40. So that's what delta is. So if we were to lose now, yeah, and it works against you too. If we were to lose $1 on Apple at 109, we would expect our option contract to be what? Now 60 cents. It's obviously not a perfect picture because Vega, Gamma, all the other Greeks work into that factor and volatility and moves the stock in different directions. But yeah, that's just a basic measure, delta.
Part
Yes.
of it. Let's talk to Aaron.
Aaron, we don't send out text messages for the day trader, but we do send out text messages for the swing traders. The day traders is just live audio in the chat room. But the swing traders get them.
He can see all the day trading though. Same at my desk. Oh.
Where you at, Alejandro? Alejandro's been killing it lately, guys. All right. You guys have anything to say? Kerwin, Alejandro?
I got a question.
Yes, what's up?
Out of all the blue chip, why do you think those blue chips?
So the Facebook, Amazon, Netflix, Google, as well as Apple. I picked those because those are the biggest, I guess you could say, have the most eyes on them. There's more volume. They have volatilities there. Every single day when we come to the market, guys, with these FANG stocks, these blue chip companies, they're always going to move. Those are going to be the things that are going to move. If the market's slow, then that's what's going to move. Every single day we can come to the market. We don't have to scan or anything. We know we can trade those stocks because they're going to move in one direction or the other, and that's where the volatility is going to be. Whether it's slow or not, if Apple and Facebook and Netflix and Google and all those are really slow, well then the rest of the market's going to be even slower. And the liquidity's there. And the options, and there's just a whole bunch of money to be made in those blue chip companies.
There you
Do we want to go over any particular tickers that anyone has any questions on?
Sure, we will.
Yeah, let me know what you guys want.
What is the difference between SPX and SPY?
SPX, here we go. Same exact thing. S&P 500, so you can see that it's valued at $2,082. This is the S&P 500. Okay? So this is 500 of the stocks. Basically, just think of it, Kerwin, as the stock market. This is the stock market. This is the biggest overall indicator. This is the stock market. All right? SPY, look at this chart. Study this chart. Look at SPY. Same exact thing. It's just in about tenths of it. It's a $200 one. So you can actually, wow, look at these lines, guys. It's the same exact thing, but you can't trade SPX. Obviously, it's too expensive. You would never trade it. You can't trade it. And SPY you can trade. It's more of a better measurement. SPY, because it's less of a value. There's more price action. You're able to read it better. The moves aren't as drastic as SPX because it's $2,000 stock rather than a $200 stock. So, yeah, it's just the stock. This is basically the stock market if you want to just keep it that simple. It's the stock market. So, if this goes up, 75% of the stocks in the stock market are going up. If it's going down, 75% of the stocks in the stock market are going down.
All right, so
Alright,
I
so
see
see
Albert
Albert
has,
he
he
had mentioned he's got his eyes on GoPro. Maybe we want to do a top-down analysis on that. Just
Okay.
the start of it.
GoPro is something that we haven't traded because there's been no volume, but I seen today that some news actually just came out for GoPro. I don't know exactly what it is. So yeah, let's do a little bit of top-down analysis for GoPro. Let's just do it basic right here. Let's get rid of all of our lines. All right, so let's see. We can see that GoPro has kind of a bottom here, guys. So you can see right here at about $9.95, GoPro has some support, but I'm actually going to make my support line a lot closer. That was kind of earlier support. Now I can see right here at about $11.51, there's a lot more support. You guys can see right here. Let me put this actually up a little closer. Resistance, 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 support, support, resistance, support. This is a very, very significant level for GoPro, $11.68, okay? So now where's our resistance going to be? Well, we're going to have a resistance here at $12.46. What would have been ideal is to buy GoPro right here using this support at $11.68 and have a very close stop loss here at about $11.43. And we're only risking, what, 25 cents? And we expect it to easily go to $12.46. So that would have been like a nice setup for a swing trade or something like that. But now GoPro, I don't even know. Let's see what it did after hours if it has. Okay, so after hours it hasn't done anything yet. It's at about $14. So that's irrelevant right now. We'll have to wait for the pre-market, guys, to see exactly what happens. But we can now see GoPro has some resistance here at about $14.16. So let's make this green. And let's say, all right, guys, GoPro. If we're looking to long GoPro, here's our point of interest. Where's our next point of interest for GoPro, which would be where? Where do we expect to, our next resistance, where we expect that we can make some profits, where we'd sell? I see here 1611. We can go way up here all the way up to 1685, which would be a significant level. So let's say GoPro, we can see GoPro test this 1691 level. And now let's find a stop loss. Where would be a good stop loss? And this is obviously going to be a swing trade setup because it's we're on a far chart and we're not going to make this move eventually, but this is more of a long-term swing trade. So right now for GoPro, we can see at the top of this candlestick would be a very good place to have a stop loss. So that's going to be yellow. Green's where we want to buy. Yellow's a stop loss. So you guys see that? $13.91. So what I would do is I'm saying, all right, GoPro, I'm looking to long GoPro at $14.14 and go long, and I'm expecting my stop loss to be in at $13.91. So now you have GoPro and you have a huge risk to reward ratio, even if GoPro only goes up here, or if GoPro only goes up to here. You have just a huge risk to reward ratio. But GoPro's something we haven't played because there hasn't been whatsoever any volume or activity, or it's dead. But now that they're having news come out, it may be great. This may be a play that we may hit tomorrow. We just have to see pre-market what happens. Because another thing touch on, guys, is we are huge pre-market analyzers. All of my trades, everything that I decide is on pre-market data. So I could not trade or have a plan without pre-market data. That is the most important thing to me, is pre-market data whatsoever.
What if you were going to short it?
So also, guys, if I were to short GoPro, because I don't ever, like I said earlier, I don't ever just make my lines where I'm going long. If I were going to short it, I'm going to short it here. Red is where I plan to short. You guys can see the 50-day moving average, so you know if we can get below the 50-day moving average, as well as this major support level here, resistance, now it's support, then we know that there's going to be a lot of sell-off, because first of all, it's below the 50-day, which is a huge support level on top of this 1325. So we expect it to test from 1325 to 1246 is going to be our next support. So now where's our stop loss if you're going to short it? Let's see. We can see the top of this candlestick. We can see it hit some resistance, some support here. So there would be our stop loss. Yellow.
Mm-hmm. And the pre-market will help you figure this out.
So does that make sense to you guys? Here's our risk. Here's our risk. Here's our potential reward. And it's as simple as that. Break your charts down like this. When they get close to these levels, read the price action, the market sentiment, and understand, all right, when we get to this level, are we gonna short it here, or does it look like it's gonna start curling around, and this would be a good place to long it? And now let me put a very close stop loss below, and now we have all the way room up here to long it as well, So that's how we look at it. Does that make sense to you guys? Okay, how early are we in the chat room, guys? So we're in the chat room about 45 minutes, an hour before the market opens. And most of the time we're not all the way until the market close. We try to trade the first 2-3 hours and lock in well over 50%, and that's it. But that's always subject to change. It depends. Most of the time, as you guys probably know, watching the market, there's the volatility within the first 2 hours, and then it's kind of just slow and dies. For our swing trades, swing trades are something that we don't necessarily wait till the end of the day. A lot of people say, I wait till the end of the day to see if the stock's going to close up towards the high and I'm going to put a swing trade on. When we swing trade, we try to buy in the midday and we try to have the stock rally and trend up all day long. And with that, we're already sitting up green pretty good, and then we swing trade it. So if it does gap down or pulls back tomorrow, we're still sitting up green and holding that profit. We'll never really buy at the end of the day, because if you were to buy at the end of the day like GoPro, and here's where your position is, well, if it gaps down tomorrow a little bit, you're down in the red. We'd rather buy GoPro in the middle of the day and let it ride all the way up here, and now we have all that room again. So another thing that we don't buy at the high of the day, which would be buying a breakout or something like that, which would we don't have the good risk to reward there. We're way up high. We're buying high now.
That's right.
So the swing trades you're buying out, you said about 3 months, but you're only holding it for 1 to 5 days?
Yes, sir. Yep. And the reason we don't, we buy about 3 months out because we don't want theta to get us. If we were to hold a weekly option, it's going to be very rarely. It was Tesla this week was a weekly option because we knew that Tesla had the volatility off the 250 level. So we decided, all right, we want to really get some big returns on Tesla because we think it's going to run here, and we've seen it was running. But like an Amazon where it's kind of fighting the 600 level for the last few days, it was fighting the 600 level, which was a significant, it was fighting it. So he said, all right, let's buy this 3 months out. Let's give it a $10 stop loss. And let's not let theta kick our butt, because we may hold Amazon for a week or a week and a half before we actually get the move we want. It just so happened that we got it within 2 days.
That's right. We're traders, not investors.
So, yeah, very rarely do we hold any swing trades more than 4 or 5 days. I mean, that's just not what we like to do at all. There's too many opportunities out there to hold for that long.
Anthony, heading into the earnings season right now, do you watch the implied volatility at all on your options before you get into a trade?
I do. I don't. Go ahead.
The Apple, if you watch, especially right before earnings are supposed to be released on Apple, you can buy the day before and it could make a $2, $3, $4 move, but depending how high your implied volatility is, something just to watch out for when we're in earnings season.
Yeah, for sure. And that's something that with earnings, guys, we're very, very cautious. We don't play overnight holding earnings because that's gambling. We don't do that. I mean, we've lost a tremendous amount of money doing that. I mean, we bought Apple once for earnings report, and we bought Apple, and it gapped up like $10. And then that morning, we were losing money on our option contract. The stock went up $10, but we lost money. So exactly what you're talking about, implied volatility, Justin. But no, we're going to play stuff, and we're going to buy them when we're buying so low, and we're in and out of these trades with earnings season. Because what you guys are going to see is earnings season is going to be so extremely volatile that we're not even going to be in a trade for more than 10 or 15 minutes whatsoever. Apple's going to have, in the beginning of the week, it's probably going to have a sell-off like it always does. It's probably going to rally and go for 2 or 3 days with its extreme moves. And then right on the day before earnings, it's going to sell off. Huge, couple percent. And then it's going to pump right back up. So, yeah, we're not going to be trading that earnings season, guys. We're just going to be in and out of trades very quickly. It's going to be volatility in the market. We plan on being in these trades for a couple minutes, and that's it.
That's it.
And obviously, earnings report on Apple and Amazon and Google. It's beautiful the next day because Google, we made, I think it was a couple 100% the day after earnings. We bought it immediately. We knew it gapped up. We bought it. It sold off, put in a bottom. Then we went long and just made it. We made like 80% on the way down, 80% on the way up.
That's right.
So, yeah.
A lot of movement.
So VWAP, guys, you guys are probably asking. VWAP, we put this up the other day as a joke. But yeah, I'm going to delete that. VWAP, it was a joke. Any other questions?
I see Chris asked to talk more about small caps. Do you
Oh,
want to
okay.
explain how you pick those?
Yeah, so Chris, small caps, the only way, so yeah, what Kerwin was asking earlier is why do we trade only these blue chips, the Apple and stuff like that. We only trade those because every single day we go to the market, we know that those are going to have volume. We know that those are going to move. Those, if they don't move, the rest of the market's not going to move. So we know that. So now with small caps, it's completely different. Small caps, we have to scan for them. We have to understand where volume's at and like that. Because as you see, small caps are either alive or they're dead. There's no in between. It's alive or dead. So what do? Every morning, we just gap. It's simple as this. You gap for your scanner. You gap something that's up more than 4%. We use Trade Ideas scanners. We show that a lot of the time in the pre-market analysis. 4% up gappers. And why the 4%? Because it shows that there's volume. So if we see a stock pre-market that has some nice candlesticks, isn't like half candlestick, it's a real candlestick, has some volume, we can break it down pre-market where its support and resistance lines are. We can break it down now into a daily, monthly chart, understand where its significant support and resistance lines are, pull up the level 2, see if the spreads are tight, which means the bid and the ask are really close. And we can make many trades like that where we can make a quick 5-10% on small caps. And that's how we trade them. Small caps, we also swing trade, some bottom bounces, some very low risk plays upwards. But yeah, small caps are, they're very simple. Everybody's trading the same small caps. When it comes to small caps, there's no secret to small caps. We're all trading the same exact small caps. It's just what's moving. Does that make sense a little bit?
Do you help new traders figure out how to set up scanners and what information to put inside those to pull up the proper
Yeah.
stock to look at?
Yeah, so guys, in our video lessons, we'll have our strategies and we have the exact scanner settings that we have. So volume over 200K, volume under here, we have 12% gappers, 4%. It's in our video lessons, yes. If you guys have mentorship or you guys just want to have a free 15-minute consultation, I'll help you guys set everything up, help you set your charts up, your brokerage, everything. So yeah, for sure. You guys will have all that.
All right, does everyone have the link or know where to go to sign up for the free trial?
I'll send you guys, when this meeting's over, I will send you a link to a free 15-minute consultation as well as the free week trials, for sure. E-Trade Pro, Matt, yes. If you're under 25K, E-Trade Pro is $100 a month. If you're over it, you don't have to pay the $100 a month. But if you don't have the PDT, if you don't have the 25K, which 99% of traders don't, I didn't when we started, go to SureTrader. Simple as that. Their platforms, I love it. It has a good setup. I'd go straight there. I wouldn't even mess with E-Trade. Yes, sir.
Cool.
And yeah, what else, guys? Alejandro, you want to tell him how you're a professional trader now? Huh? You want to tell everybody how you're a professional trader now? Alejandro, guys, you better watch out right here. Alejandro's going to be taking over. He's sending me pictures of his trades every day, and I'm amazed. He's kind of kicking me in the butt. He's doing good, guys. He was a psych student before and lost a lot of money there. Didn't get the help or the attention he needed, and he found us here. So
That's the thing I want to do it. I've been part of the AMD now for just a little while, and I've been part of other chat rooms, and the one thing I fell in love with was the fact that even if you're new or you have questions whether or not how silly you think they are, they're there to answer your questions. If you're not doing good, if you're constantly losing, they're gonna take a step back and figure out what you're doing wrong and how to fix the problem.
yeah, for sure, guys. We will spend night and day. to help you. I mean, that's what we're here for. We've gone through it. We've had many nights where we couldn't sleep because we were down so much money, and failure is not an option here. We will not let you fail. If you come to us and you use the tools and stuff that we have provided for you in the community and everybody here, you're going to succeed. There's no way you're not.
As long as you keep the rules.
So,
Right.
yeah.
We're all here to help each other. If everyone, you know, gets trading the same, we all look at the charts the same way, we're all able to learn each other, we understand what the alerts are and how to play them.
Yeah.
Yes, that's right.
Yeah. And it's very simple, guys. It's not hard. Just got to change a few things. Got to understand to look at trading in a different limelight and how people take advantage of you and how you can react to it and how you can use that, them taking advantage of you, how you can use that to be a better trader. That's it. It's really simple.
You know, we're I'm sure you guys are open ears if there's something, you know, some criticism or something different you think we could be doing. I mean, all open ears to that.
Oh, yeah.
Yes.
Yeah, we're big candidates for that.
And
Just want to ask you while we have everyone still in the room, is Wednesdays good for everyone for webinars? Is there something, a time that works for everyone that's in here right now?
Yeah, how is Wednesdays, guys? Because we want to make this a weekly thing. I mean, we're taking our time to meet you guys and try to make you the best traders. I mean, that's what we want to do.
Yep.
Okay.
Perfect. Good. All right.
What about old Johnny boy? He's in here killing it too.
Yeah, John's doing good. Kerwin's doing good.
Kerwin's killing it. He's successful every day. Green trades. Kerwin a month ago, guys, he didn't even he was trading these what were you trading, Kerwin? Some like newsletter pumpers or something like that, penny stocks? Yeah, he didn't even know how to read a chart, guys. He looked at the chart and was like, da-da! And now he's making the weekly swing trade watch list with us.
That's right.
So, yeah. Tell him your funny story about the strike prices. Kerwin, guys, when I would tell Kerwin, we were looking at like Apple 110 calls, for instance, he'd be pulling up 110 different strike prices for Apple. He was confused, had no idea. So now he's killing it. He's doing good, very good.
He is.
And you guys are gonna see that every single time we're in here making a successful trade. When we're winning, we're happy, we're cool, but we're not over here screaming and yelling and bragging. We're screaming and yelling when people are making successful trades. I'll tell you that.
That's
Our
right.
members are making money. We're
That's fun.
it's fun. No better feeling than that.
Yeah, just so everyone knows, we have a Twitter page, Facebook, Ticker TV. You can feel free to follow us all on there too.
Yeah.
Yeah, and send us emails, call us. Our number's all over the website or emails if you guys need anything, and we're here. Don't be shy.
Yeah, don't be shy.
So is that it? Does anyone have any questions? Jason Stuck, can you hear us? I want to talk to you a little bit. We've been missing you, Stuck. You've been too busy for us.
Yeah, schedule's messing him up.
It's alright. We'll get you in,
It's that full-time job.
yeah, we'll get you in that swing trade, and you'll be in the chat room. You're getting it. We'll get you there.
That's right.
You guys live a great dream, you know?
We're missing you, I'll tell you that. Dang
That's
it.
for sure.
So, you'll be there. How does paper trading work with you guys? Richard, you can paper trade using many different programs. What I really would like to do for paper trading, Richard, is if you come to us and you say, all right, I want a paper trade, I would love to, every couple times a week, say, all right, Richard, let's look at your paper trades. Show me exactly what trades you're in. Let's look at your successful trades. Let's look at your failed trades. And let's see how we can make you a better trader. And that's really something that we want to stress here. Paper trade and talk to us and say, hey, guys, I made 50% this day. I lost 70% this day. What am I doing wrong? And we can better you.
That's
Paper
right.
trading is so crucial. We didn't paper trade in the beginning, and I wish more than anything I would have paper traded.
No, you ain't kidding.
So if people don't understand, we didn't know what paper trading was before. We thought paper trading was writing your trades down on a piece of paper. No, you can use a paper trading account from Thinkorswim, SureTrader, Dash Trader, TC2000, many different things where you're trading with fake money, but it's the same exact thing. And that's so important because you have to learn how to be able to get into these trades really quickly and out of them. You can be in a trade and get in it, and you can be up $500. You cannot know how to get out of your trade like we did, and you think you're selling your trade for a profit, and then you lose a couple $1,000. So it's so crucial to paper trading. Richard, let's see, what would be best?
Well, if we could get that simulator working, it would be great, but I know TC2000's delayed. I don't know which one's
What do you guys recommend? Because I recommend, see you, Albert.
Okay, Albert.
I recommend Dash Trader if you can do that. That's $100 a month, so that's kind of expensive. I know TC2000 here. I think that they have a paper trading account. I know Alejandro has been using it quite a bit, and he loves it. You just get in and out of your trades on your charting, so that's really cool. I know Kerwin and Justin, they like Thinkorswim. I hate Thinkorswim. Don't even know how to use Thinkorswim platform. I tried, and it just bothers me.
That doesn't mean you won't like it.
But Richard, if you would like to give us a call and a consultation, and we'll talk to you, and we'll give you some options and help you figure out which simulator would work best for you, and whether you're running a PC or you're running a Mac, and what options there are to go from there.
And we definitely suggest the consultation. It's free. We would just love to talk to you guys.
Yeah, for sure, guys. Yes, yes, yes. Any last questions? The Warriors are on tonight, guys. Last game.
Oh,
so
that's right.
we got to see if they're going to do it.
Go Warriors.
You're going to watch it tonight?
Okay. Anthony will watch the last 3 minutes, though.
Yeah, I just watched the last 3 minutes. They're going to do it, Stuck. Let's do it, baby.
That's right.
Come on, guys. Any questions? Anything else? Anything you want me to go over? I'm here.
If not, we will... Yeah, that's right.
Yeah, so guys, like... Go ahead.
So these are weekly webinars, right?
Yeah, we're going to do these every Wednesday, and... yeah, I mean,
this is the first one.
This is the first one, and we do this, guys, every single morning. I mean, this is what our system is about. This is what AMG Trading is. We have live audience screen share, and we're giving you guys access to ask us questions all day long in the chat room. It's not just following our alerts, and so it's studying, it's talking. It's the same exact thing we're doing now.
That's right.
It's a community of people that want to help each other succeed and won't settle for anything less than that. So, cool. Yes, sir. It'll be every Wednesday. Yep. All right. Kerwin, Alejandro, Justin, John, anybody have anything else they want to say?
Nope, just make sure the coffee's running in the morning.
That's right. I'll be headed to Starbucks.
Minu, do you have any questions? Okay, are you starting to understand a little bit more these just how we trade Minu and the basic support and resistance lines?
Good.
Good.
It'll get simple soon enough.
It's going to be easy. Very easy. Watch out Tesla, though. Tesla looks like it put in a bottom here. Looks like it's on its way up.
See ya, Jason. Scottie Pippen said the Bulls with his foot.
I don't know what it's going to do, Minu. So that's another thing, guys. We don't care. We don't know what the market's going to do. We just react. But yes, it looks, you can see on a technical analysis basis, you can see that Tesla is definitely holding this 245 support. It's holding this 248 support, and now it's holding this 250 support. And we have some resistance above head at 256, 255-ish. 250. But I think we can see Tesla. I think we're going to see it up here tomorrow.
But we don't know.
If oil is going to give us a run and stuff, yeah. Yeah, so we'll see. All right, guys, we're out of here. Thank you for joining us.
Thank you very much.
Have a good night, and we'll see you guys.
Thank you, guys. Thank you.
Thank you. Good night.
Thank you.
All right. You guys have a great night.
We'll see you guys in the morning. Let's go get them.
Yes.
Bye-bye, guys.
Bye-bye.